Wisdom. Ken, welcome.
Hi John, how are you?
Thanks so much. Yeah, Ken, I don't know if you heard some of that from Christoph. I was, at the beginning of the session, just asking him about his elephants in the room at the moment, the possibility of the Irish government selling off its remaining stake, and Ryanair, or arguably Michael O'Leary's personal wish to have had a majority shareholding in the company.
Well, Michael doesn't want the majority shareholding.
Has he changed his position? Or has he accepted, but he's not going to be able to?
He said last week we will be supportive of any sale process by the Irish government, and you know that is our position. So the question is whether the Irish government can find a buyer for their shareholding in Aer Lingus, which I think will be a challenge for them. But you know there is a ongoing inquiry here in the UK about our shareholding, which we have a very clear position on in terms of competition impact and the lack of any competition overlap or distortion of competition between ourselves and Aer Lingus, between Ireland and the UK. So that's about as much as we can say on the Aer Lingus situation from a Ryanair perspective.
Okay. I mean, we did talk with Christoph about possible buyers and talked about the large legacy groupings, but seemingly Willie Walsh has said he's not interested, at least in the context of a pension fund. Lufthansa is taking a more organic approach to growth, and Air France-KLM is being somewhat slated by financial analysts about cost issues. So is there anybody else you would see possibly out there who might be interested in, with whom Ryanair could work, as you've indicated you may wish to?
Well, what we have said is that if there is somebody who will buy our stake at an acceptable value, then we're willing to sell it. That is our position. Now, who Aer Lingus or the government identify as prospective buyers, I mean, we leave them do that piece of work.
And just a last question relating to Aer Lingus before we turn specifically to yourselves. I mean, how do you look at them? You're a shareholder, but how do you look at them as a performer in a market?
They're a competitor.
But in terms of, do you regard them as a good...
They're a high cost, a high fare competitor,
okay.
Unlike what Christoph mentioned earlier.
Okay. Let's turn to yourselves now, Ken. You've just reported profitability in the last year in the region of 400 million euros. You're expecting more or less the same in the year ahead based on your last financial guidance. I think the way that's been put across is that you're not happy with that position because of various cost issues, treading water despite growing as a company. But many airlines would be envious to have both that absolute level of profitability and that level of margin too. Sure. How do you look at that year ahead?
Well, I suppose we don't benchmark ourselves against other airlines is the first issue, and you know many airlines would consider 400 million euro, an exceptional return. We don't see that on behalf of our shareholders. We have higher objectives than that. The key challenge that we'll face this year is obviously the escalating price of fuel. To put it in context, we will need to recover an additional €3 per passenger on the fare from every passenger, just to cover the increased price of fuel that we're going to incur this year on a like-for-like basis. So, that is a significant challenge. We're meeting that challenge to date. We've had a decent first quarter set of results. The first half, will be consistent with previous guidance, and we haven't changed our perspective on the final year outturn, which will be in and around the 400 million net profit after tax that we achieved last year. The obvious issue is the slowdown in the rate of growth that Ryanair has delivered this year, which going from 72.5 million to 75 million passengers is supporting the rise in fares. That coupled with basically a rising tide with other competitors increasing fares or introducing surcharges or so forth. So, we've been able to make it stick this year. It'll be interesting to see with the continuing escalating price of fuel whether we'll be able to make it stick in 2012-13.
I mean, fuel is almost half of your costs now, and looking through one of your investor reports recently that you issued to the US Stock Exchange, I mean, one of the risk factors that is mentioned in that is that in a high fuel environment, one of the potential risks is if you're not able to influence other costs effectively enough to compensate for a high fuel environment, that could affect your future business strategy.
Sure. We also have the highest margin within the industry, which gives us some insulation in terms of our profitability. So as we've seen this year, when other airlines who don't have that sensitivity or security in margin have to rise fares or raise fares or cut capacity to protect their position, we have that insulation. And we've seen that this year follow through in terms of we've been able to raise fares on the back of basically an industry rise in fares. It's interesting, I heard Christoph's last comments just about cutting capacity or to meet the capacity, to structure the capacity to meet the inherent demand. That's what we're seeing from other carriers this year. It's what we're seeing going into the winter from carriers in Ireland, in the UK, in Germany. And basically what it presents is a curtailed environment which supports higher fares, of which we will also benefit. The fact that we have the lowest fare in the industry, we have the added benefit of people trading down to us.
But is this a change, Ken? I mean, Ryanair will very publicly, in all its publicity material and statements, highlight that it would never, ever have a fuel surcharge. But are you now saying it's going to be a more regular thing to see Ryanair fares going up? Or will you lose what you're known for, which is the bargain deal on fares?
No, John, we're in the business of making money. So the higher the fare that we can achieve, the more money we're going to make. Our fares relative to anyone else is still 30-35% cheaper. We have a fare level that can stimulate demand that nobody else can do. That position won't change. Whether it moves by 2, 3, 4 euro, it may very well have to move by 2, 3, 4 euro so that we can maintain profitability going forward. But in the context of us moving by 2, 3 or 4 euro, others moving by 10 or 15 euro to maintain their margin, our price differential versus our competitors will actually increase as opposed to decrease.
So you believe that you will stick by this mantra, no fuel surcharge. You believe fares can go up, but significantly different enough to competitors that the kind of price-sensitive traffic will still come your way, even in challenging economic times.
I think the industry will react in terms of capacity with one of if the most significant input cost continues to rise, capacity will fall. If capacity falls, the lowest fare operator with the highest margin is in an advantageous position to maintain growth, be it moderate or more moderate than in the past, but to maintain that growth at increasing fare levels. So, for example, this year, we will grow by 6%, but our average fare is going to rise by somewhere between 12 and 15%. That is a reasonable performance in our view. We'd like it to be better, and the challenge that we all face in the commercial department is to improve on those numbers.
You mentioned about capacity falling in the months ahead, or indeed now, and Ryanair yourselves have made a pretty substantial statement about your plans for this winter of grounding up to 80 aircraft. I think, was it 40 or so last year? Yeah. That's a phenomenal number of aircraft to be sitting on the ground for theoretically up to 6 months, and you have a young fleet. You're not talking about depreciated old aircraft. Is that some kind of publicity stunt, or is it something that you really believe makes business sense?
No, if it loses us less money in the winter, it's the right thing for us to do, and we would have done a proper exercise in terms of marginal costing, marginal benefits at looking at that. It's 80 aircraft out of 300 is the context as well. The other thing is it's probably not going to end up at 80 aircraft as you look at some of the opportunities that we've reacted to in the last 2 months, 3 months. You take the example of BMI Baby closing their Manchester base, for example. That gave us an opportunity to open a base in Manchester.
Was that actually a lever to you thinking about that?
Of course it's a lever. I mean, if an airport is losing a hub carrier or a base carrier with a reasonable amount of capacity, they're going to look to need to replace it. That phenomenon and that characteristic, will become even more increasing and more apparent if oil stays at the levels it is, which is, I suppose everyone in the industry would probably have the assumption that $100 plus oil prices are here to stay for a considerable period of time anyway.
So would that be the Ryanair view, that you're expecting high long-term prices in 3 digits or?
There's nothing to tell us that that it's not going to be, and I think what we will equip ourselves with is to react, as we've always done, react quickly to opportunities that arise as people who don't have the stability, the cash resources, the margins and the profitability that Ryanair have just run out of road.
You said you have a fleet now in the region of 300 aircraft. You've been with Ryanair some years, you've been part of that growth. We had EasyJet on the first panel this morning, which is a company that's also grown from small beginnings around about 15 years ago. And the CEO, Caroline McCall, saying they won't introduce complexity and layering, but they have changed their business model in a number of ways. They are focusing more on business travellers. You talked about fare rises, but are we going to see changes in the Ryanair business model? We've seen one, arguably, chink in the armour or change in that you're widening this, paying for an actual specific seat onto a number of your bases now, having done a test on a couple of routes. Does that mean you're now going to go after what you could loosely call business customers?
Yeah, I mean, the paying for seats is not a difficult change for us to introduce. It's a relatively straightforward change to develop and to implement in practice. It costs us nothing to do, and if it generates an extra 10, 15, 20 million euro, it's going to fall straight to the bottom line. So we could never be accused of not being adaptable, John. And if there's something that we can do to drive the bottom line performance of the company without affecting the operational efficiency and the basic approach that we bring to things, then of course we're going to look at it.
I think you've been quoted, if I remember rightly, Ken, at another event in the last year, and we're going to talk about the rate of growth of your fleet in a moment. In that context, I think you said that if in the past we wanted to do a deal badly enough, we might accept some margin of negotiation, maybe 10 or 15%, but now with less fleet available, we'll be at least 99% demanding.
Yeah. I don't think I ever quoted 10 or 15%.
Okay, was that too high?
But we may have, in taking 48 aircraft, for example, in 2008, 48 net new aircraft, it was a phenomenal level of activity to be putting into the system. We did that, with reasonable ease, and we're bearing the fruits of that work are coming to fruition, since 2010, 11 onwards, as we've seen fares rise. This year, for example, to April 2012, we'll take delivery of 22 new aircraft. We have 18, 19 of those penciled in as to where they're going to go at the moment. Did we concede anything on those? No. Does that mean we still haven't opportunities to take advantage of elsewhere in Europe? We do. Where we source those aircraft, we'll take them out of existing bases if needs be. And next year we've got 7 aircraft. So the challenge becomes for airports in dealing with Ryanair becomes even more significant in terms of getting their hands on some of the growth that we can bring. But we will use that opportunity to drive costs down and to drive the maximum profitability that we can for the company.
Do you think that is going to become more difficult for you? I mean, you're known for your determination and ruthlessness, you could say, in negotiating stance, and it feeds through to what we see in the results of the company. But I'm just thinking that you fly to a whole diversity of airports throughout Europe. Many of them are public sector owned. They work with partners, whether it's in terms of marketing support for routes or discounts or landing charges. But if we look at the state of a number of European economies, in Ireland being one, the UK being another, major areas of activity for Ryanair, do you think you're going to be able to maintain that pressure and get what you're looking for in these deals? Or are people going to say, I've got nothing left in the kitty, I can't do more? Because you may well move. You've shown more than perhaps many airlines your ability to move those mobile assets around, as you just indicated there. But is that going to suddenly start running out for you? You find we can't move them somewhere because no one's got the...
John, we don't carry 75 million passengers because it's a one-sided relationship, right? Mm-hmm. The business we bring to people, it's commercially orientated business. It makes sense for both sides. I mean, you don't have Bergamo making 10 million euro profit, Charleroi making 15 million euro profit, unless this business makes sense for them. So, yes, we are tough and we are direct, and we have Ryanair's interest at heart. But if we don't have a sustainable business with our airport partners, then it's not going to be around in the long term. We're doing this 25 years at this point in time, so we have, and the majority of our bases have been with us from inception. We don't close bases willy-nilly. Yes, we have some attrition in terms of our route network, but that is probably 1-2% per annum, which in the context of a network with 170, 180 airports in it is negligible. So we will continue to push. Everybody in the industry has to face up to the price of oil at the moment. This is not an airline issue only. We have one common thing between airlines and airports, and that is the passenger. And the passenger will only fly if the fare is sufficiently cheap enough to stimulate the interest. We can only bring him if we're making money on it. In that respect, oil is a challenge for everybody concerned. So as we look at growth for 2012, yes, we'll be looking to secure cost reductions from airports in return for that growth.
Just before we go to the audience, because I'm sure there's going to be questions for you, Ken, one last question from me at this point. We've got the fleet slowdown happening after the big next influx of new deliveries next year and a few into 2013. Yeah. Then there's a gap. Ryanair. Well, what I was going to say is that there's a gap in the sense that you walked away from a table with Boeing, but you've now, in the last few months, I think the Paris Air Show announced a memorandum of understanding with COMAC of China. Yeah. Is that just another bit of clever negotiation to put the pressure back on Boeing or even Airbus, or do you think you really would go down that Chinese route to resume growth maybe in about 4 years' time if they can come up with the right type of aircraft?
If the product and the cost is right, of course we'll look at COMAC. I mean, why wouldn't we? Everything that you use in your house or you drive, right, originates from China. So to suggest that they can't make an aircraft comparable to anything in the Western countries, I think is naive, and we look forward to working with them over the next 5 to 6 years in advance of hopefully an introduction in 2017 of an aircraft which will allow us to push beyond the current 11% market share that Ryanair has of European short haul. So when you look at that number, 11% market share, it just, for me, it demonstrates the untapped potential that remains within Europe for Ryanair.
And you're actually working with COMAC in terms of giving them the insiders of what you need in terms of an aircraft.
We'll tell them what a low-cost carrier needs in terms of an aircraft.
Okay, let's go to the floor. There must be questions for Ken. Yeah, gentleman near the front, if we can just get a mic towards the front.
Okay, hi Ken, my name is Andreas Scholz, Aviation and Tourism. Concerning the business travel market, it seems that Ryanair is looking a little bit more careful to this segment. Are you seeing in the future any more options to it, especially what EasyJet is doing? Has Ryanair some own ideas on that segment?
Not specifically. I mean, we've always had, our route network has always supported some element of business traffic. We'd estimate 15 to 20% of our traffic is business orientated. What will occur, or what will happen, is as the network expands and as the network develops, for example, into hubs like Barcelona, where we have multi-frequency routes from Barcelona to like Santiago to Compostela, Santander, Seville, and so forth. That mix or that penetration will increase by reference to our network decisions, as opposed to a specific decision to target business travellers. We don't have any specific focus on one element of the market. What we are proud of is that we offer something for everybody, and so far that mix is working well for us. And a multi-frequency route from Barcelona to Seville caters for both business, VFR, leisure, and so forth. And the more strings to our bow on a particular route, the higher the likelihood of a successful route we'll have.
We have a question here in the middle. Well, Mike's just on its way, so just give it a few seconds.
Andrew Schuberg of People Air Group Berlin. Do you have any plans to expand beyond to Europe, mid-term or long-term?
If you look at transatlantic, from a Ryanair perspective, no. I mean, Michael speaks frequently and sufficiently on that topic to confirm that if it were to occur, would be something that he'd look at on his own. I mean, outside of Europe, within the context of bilateral agreements and horizontal agreements, absolutely, yes, we will look at those type of opportunities. In terms of, if you look at Morocco, for example, and the way that market has opened up since the horizontal agreement with the EU was signed, and if you look at developments with the likes of Tunisia, Israel, Georgia, and so forth, there are opportunities within the range of a Boeing 737-800, which are outside of Europe, that we can look at. Now, some of those opportunities will be only valid or applicable from certain parts of Europe. So we wouldn't get for example, Georgia from London, but we would get there from Italy or Germany, for example. So we will look at pushing the boundaries, and we've consistently looked at pushing the boundaries. And the expansion of the network within Europe, I suppose, facilitates that for us anyway.
One on the front here. We got the mic, please. Just coming through.
Good morning, Ken. Bernie Baldwin from Low Fare and Regional Airlines. One point there, picking up on Andre's question, in your defining to COMAC of what you want to see, will longer legs on the aircraft be one of the things you're asking for, so that you can do things like London to Georgia?
No, the most important thing we want on an aircraft is 199 seats, which is 10 more than what we have at the moment, without a requirement for an increased headcount in terms of cabin crew. So if we can get 10 more seats, we get close to 6% additional capacity with no additional variable cost involved. So that's one of the key characteristics that we would have.
My other question was regarding the development of routes. There were figures put up yesterday by Anna.aero that you added a net 120 routes last year, but you opened 289 routes, and so therefore there were almost 170 dropped. What effect is this having on your relationships with the airports, which are getting, shall we say, which are losing service, and possibly losing that service after not a great deal of time having the route operational?
There's two components, I suppose, to that. The first component is we operate close to 1,800 routes. So, cancelling 170 is less than 10%, which, if you look at the history of our network development, it has always been in that range of 5 to 10%. It's reflective of our willingness to engage with people and to try things that many other airlines wouldn't try. In the context of not giving things enough time, it's not in our interest to cut short something without giving a route an opportunity to develop. So, we have certain criteria that we expect from a route for it to be sustainable. The most important and the first one that we need to see is traffic. I mean, if you don't have traffic on a route, you may as well give up on it. But we will have traffic, and we will lose money on a route for up to 12, 18 months, provided we see a forward progression on the fare. If we see a forward progression on the fare, it gives us the confidence that there is a market that can be stimulated, there is a market that can be created. If we don't see progression on a fare, then it's after 18 months or thereabouts, it's neither in the airport's or the airline's interest to continue to effectively waste money and to lose money. So that's why we would cancel routes.
I think we're pretty well out of time, unfortunately, Ken, for this session. So I'll thank you very much for coming along today, giving a Ryanair perspective, and we look forward to welcoming you back for the next twist in the tail. Thanks very much, Ken O'Toole. Thanks, Ken.